Hey Bulls and Bears, it is Wednesday, June 24th, 2020. Our lead story is going to be Jim Rogers calling for a coming blow up in the markets. We're going to talk about what he means by the market blowing up, when it's possibly going to happen, and it's going to sound kind of familiar to a lot of things we've been talking about on this channel. But it's interesting to see a famed investor like Jim Rogers coming out and saying pretty much the same things we've been talking about. But real quick, before we get into that, just a monster sell-off today in the markets. Dow Jones down over 700 points. All of the major indexes down over 2%. We also saw crude oil drop down to about $38. And I believe tomorrow there's going to be another unemployment number coming out. And it's likely going to be another million plus unemployment. And that's going to bring the total closer to 48 million since the shutdown in mid-March. Now again, I always remind people that is the cherry pick number. The real number is well over 55 million now newly unemployed. And add that on top of all the unemployed people that were already jobless before coming into this downturn. Now also later on in this report, we're going to talk about the likely coming disaster when these extra unemployment benefits end, and we're going to look at some analysis on that as well. Now on this channel we talk about why the markets are being propped up like they are and what the end game might be. What is the goal? Well, we talk about the important event happening this year in 2020 in November, so most of you probably are in tune with what's happening. And just a quick excerpt out of Jim Rogers' interview here. Quote, "The main thing that's going on in the world is that central banks all over the world are printing huge amounts of money and governments are borrowing and spending huge amounts of money." Jim continues, quote, "First, you must remember that in America, there is an election in November, and in Washington, they're going to do everything they can do to get re-elected. That is what they do. They do not care about us. They do not care about our children. They care about getting elected. So until November anyway, there's going to continue in the U.S., but other places will probably follow too. The end game, while often in history after a long rise in the market, it turns into a blow of bubble." And I think they meant to say blow off bubble. Continuing, especially when there's a huge amount of money that suddenly comes in, and I'm not very good at timing the market, but I suspect we may have a blow up, at least in the American stock market, and maybe the Japanese stock market because of all of this madness that's going on. Unquote. So at first glance you may say, well, the stock market, big deal if it blows up, I'm not invested. Well, even if you're not directly invested in the stock market has a major impact on company hiring decisions. Also pensions will absolutely blow up once the stock market takes a dive. There's already pension cuts happening right now. Also, 1 in 3 workers has a 401k retirement account, and most of those accounts are tied to the stock market. Also, I should add, most 401ks do have a money market option that's giving people a very low yield right now, so I think a lot of people are still gambling with their retirement accounts in the stock market. So when people see their 401ks drop along with the stock market, that's going to have a major impact on consumer confidence, consumer spending, and we know when consumers stop spending, there goes most of the jobs here in the US. All of this market propping is just a way to keep this entire system from imploding, and some people would argue that it has imploded. Anytime you see this level of intervention into the markets via the central banks, it is a sign that the system has already failed. Now many people won't feel it yet because that's the purpose of these liquidity injections, of the trillion-dollar stimulus packages, and the record-breaking accumulation of debt via the US government and the central bank. But what's going to happen after the incentive to keep this entire system from collapsing comes to an end? What's going to happen after November? You let me know. There's many people out there saying that they can't hold it together until November. I think they can because, again, they have unlimited tools, and they've admitted it. Most people know by now there's no limit on how much money they can create, how much they can inject into different areas of the economy. Banks can now lend unlimited amounts of money without having to worry about any sort of reserve requirement. Again, that was waived back in March. I think most of you on this channel already know that. Now what they're really going to have to do, because this again is a consumer based economy, they're going to have to help the consumer. So what's that going to mean? There's going to have to be more stimulus checks given out to the consumer. They're going to have to push back the tax deadline again. Let's talk about that next. Recent report here out of Bloomberg, Mnuchin says the tax due date may be extended again. Well, we've been predicting that on this channel. We think they're going to push it back until past November for obvious reasons. Also, other famed investors and money managers are out there asking the same question. Here's a Market Watch article. Will the Fed spend trillions of dollars every year forever to support the markets? Asks billionaire Howard Marks. And he continues, he asks the question, how do people feel about buying securities that are only high because the Fed is buying? Okay, Mr. Marks continued, quote, right now it's time to take a cautious approach and buy defensive and quality securities rather than be too aggressive. Mid-March, he's talking about the market drop, was the time for aggressiveness. That was the time to be aggressive, and now is the time to be cautious, unquote. So you have to agree with them. Stocks are only a good investment if there's another person to come in and buy those stocks from you at a higher price later on. And that's why I say here, if you feel like the Fed's going to continue to prop up this market forever, then buy stocks, because then we're going to go right into never-ending inflation. Now, I don't recommend that because I myself, and I really shouldn't say recommend, I don't give investment advice, I myself think there's going to be a massive round of deflation after November. Remember, the boom and bust cycles, the ups and the downs, is where the real money's made. And that's also how they transfer a lot of wealth from these novice investors up to the upper 10% in the top tier, multi-billion-dollar investors. Right, so I think a lot of you already know the routine. Get all the suckers to jump in at the peak of the bubble. And now it seems like a never-ending bubble because of the timing on this thing. Again, there's an important date happening in November. They have to keep it propped up. So be prepared for, could be a crash, could be a decline, could be a plunge. Either way, I think there's going to be massive deflation in the stock market, in the housing market. And once they stop injecting liquidity into the banks, or what if the banks just decide to pull back on the lending to create the bust just by freezing up credit? Right? We're already seeing a little bit of that happening. Some banks are being a little more strict on lending, and mortgage guidelines have tightened with some banks. One of the biggest things in the housing market is we have the foreclosure moratoriums, or the hold-on foreclosures, and we also see a lot of people are not having to pay their rents. Right, so it's giving the illusion that things are not actually falling apart, but when you look at the number of defaults and late loan payments, we know that this whole economy is just one ticking time bomb, and now a lot of people, even well-known investors, are questioning the exact same things that we said you should be looking at for a long time here on this channel. Recent CNBC article right here, millions of Americans are going to fall off an income cliff when the extra $600 in unemployment benefits runs out next month. Right? So again, a reminder, at the end of July, these extra unemployment benefits run out, and all these people that were reliant on that extra income, on that extra government check, the stimulus, well, they're going to need some sort of life raft to save them, and I think it's going to be another round of stimulus. And you notice the talks getting more and more about the next round of stimulus. We even had the president come out there recently saying, yes, there's going to be another round of stimulus. So could be that they're going to try to time it right around the end of this extra unemployment benefit running out. We'll have to see. But you know and I know they're going to try to keep this propped up. None of this is a surprise to any of you that have been watching this channel. All right, Bulls and Bears, I'm not trying to spread fear. I just want you to be prepared. Again, I like to say it. I'll say it again. Maybe I'll say it every episode. Prepare for the worst. What's the worst going to be? It's going to be an absolute devastating market collapse. And I don't think we've seen anything as far as unemployment numbers yet. I think it could absolutely skyrocket to 60 million, 70 million after this whole prop-up scheme is done. This entire system, this entire economy is based on nothing but debt and credit. Remember, when credit freezes up, money velocity drops, and you're going to see even bigger job losses, even bigger than what we're seeing right now. A lot of businesses aren't going to survive this shutdown, And if they pull back on the stimulus to the consumers, which is 70% of the U.S. economy is consumers, then where are businesses going to get their money from? Are the businesses going to get money from the government forever? Well, no, there's going to be some sort of event, call it a financial reset, possibly finally, that will expose this entire rigged system. But again, one of my fears is that they're going to be floating out another event to put the blame on. I think it could be some sort of banking system hack, some sort of a grid failure. I think it could be some sort of banking system glitch where no one can access their money, and they'll put the blame on that. Maybe we'll see flash crashes in the stock market. They'll blame it on some sort of glitch or some sort of outside forces that have compromised the systems, if you know what I mean. There's always going to be a blame. Maybe it'll be a power grid failure where the nation goes dark and they can blame the crash on that. We'll have to see, but I say be prepared. I'm not predicting any of these things to happen. I'm just saying look out for these types of events, because this is the type of environment where things happen, if you know what I mean. Thanks for watching this report, everybody. I'd like to hear from you down in comments. Hope you come back for more doses of economic reality. Bye for now.